remember when I was at the GTC, which is the festival that is all things Jensen. Jensen took me over to see what they were doing. It was very, very exciting. But don't forget, Dell had the product, and Dell got killed. And then it's come back. He got killed because of, I felt, just because of tariffs. I think Dell's the better buy. NVIDIA is struggling with this 143 level. Although, once again, the most valuable company, overtaking first time since January. Well, I mean, look, I think that he was hoping that there would be, and he says, look, the president has a plan. And the president, I'm sure, does have a plan. Meantime, I'm watching Broadcom. Now, this is the quiet $1 trillion company going up and up and up. That's Hock Tan, another person. I mean, I love to regard these people as competitive because I want people at home to know that Hock Tan is not sitting there saying, how are we doing? He's saying, I want to be number one. So is Kurtz. He wants to be number one. Yep. And Jensen, he is a quiet number one. But boy, is he competitive. Welcome back. There's been a change in investor sentiment when it comes to NVIDIA. Our Christina Partsinevelos is following that this morning. Morning, Christina.
Good morning, Carl. Well, despite blowout earnings and a 24% rally just over the last month, retail traders have been dumping shares of NVIDIA. Vanda Research shows traders sold more than they bought over the last week, that you can see on your left-hand side, as well as on the last 21 trading days. There's also a NASDAQ sentiment chart, which also confirms this same pattern, which is pretty much net selling for the latest 10-day average. You can see just really on the right side of your screen, it's the sharpest drop in just the last 3 years. And only just yesterday, when NVIDIA became the most valuable company in the world, did retail swing back to buying NVIDIA, although only a mere $35 million for the day, according to Vanda Research. So the split is really just stark. Retail investors who rode the 2022-2023 hyper-growth wave are now bailing on the stock. Dan Ives from Wedbush told me that retail is just more worried about China drama and the export restrictions, while analyst Ben Baharin notes traders are frustrated by fading spike returns as NVIDIA's business matures. They, were looking for that quick buck and now not getting those gains. Meanwhile, institutional investors who reduced tech exposure during April's sell-off, you can see the dip on your screen there, are now forced to buy back in as the rally continues, taking the opposite side of retail investors over the last little while. Mizuho's Jordan Klein calls NVIDIA's second half, though, the setup's fantastic, and that's why investors on the institutional side are getting in. The divergence, though, signals a market evolution as NVIDIA transitions from hyper-growth to steady growth, with much AI upside already somewhat priced in. Some can debate that. Institutional capital increasingly drives today's price discovery. Retail selling streak may now serve as more of a contrarian indicator for institutional buying opportunities rather than the bearish signals that we're so used to seeing for stock performance. Sarah?
Okay, Christina, thank you very much. And NVIDIA flat today, but it's had a nice run.
When it comes to selling, NVIDIA continues to be the top sale. That was our mystery chart from earlier. For more, let's bring in Steve Quirk. He's Robinhood's Chief Brokerage Officer. Welcome, by the way. Good to have you here.
Thank you. So, happy to be here in person. Thanks.
We've been talking a lot about, this is my favorite line to harp on, retail being the smart money here.
We agree.
So I like to flatter them. But, I go back to early April. They were buying the deep sell-off we had then. We've talked about this. Now they're selling NVIDIA to a large extent, and what does that tell you?
It tells me that their willingness to step in and purchase it when it was trading at much lower levels, they've been rewarded, and so they're doing what we have been, what you have been talking about. They're actually portfolio managers. They're taking their portfolio, and when they see significant gains in a name in a short period of time, they're rotating out of some of that and moving into some of the other names that have been depressed, like Salesforce, Okta, some of the other ones that haven't done as well.
You may not have this data, but when they're selling, who do you think is buying?
You never know.
Right.
It's institutions, could be other retail.
Yeah.
I think one of the things that I talked about the last time I was on, which is really fascinating, is in times of extreme volatility, we saw the VIX almost at 60%. We see customers move from individual names to broad-based ETFs. And the thesis is they have more conviction that the market is going to rebound than they do any individual name. And so we went from, normally let's call it 80% of the trading is done in individual names, 20% in ETFs. It went from 80-20 to 60-40 in April, and in the periods we were talking about with the tariff uncertainty. Now it's back to 80-20.
And chip stocks are higher today, despite Commerce Secretary Howard Lutnick saying in a hearing that the White House is renegotiating some, quote, overly generous CHIPS Act grants. And while NVIDIA has currently lost its crown as the world's most valuable company, it's a back and forth, right, with Microsoft. Microsoft's market cap is back on top. It's one of our next guest's best ideas. Maybe not a shock there. Here on set is Dryden Pence, the CIO of Pence Capital Management. NVIDIA, I gotta say, is probably, it has been for years now, one of the most searched tickers on CNBC.com every single day for years now. But it's still a best idea for you. Why?
Absolutely. And we've had it since 2018 and continue to increase positions in it. Why? Because we're just at the early stages of the build out of the infrastructure around AI. It's like we're just laying the track of the Transcontinental Railroad. NVIDIA is the absolute choke point to that. And if we're going to grow AI and what it's going to do for labor productivity at every company in the world, NVIDIA is going to be a key part of that. And so we think that their chips are absolutely essential to growth. We think their chips are absolutely essential to increase labor productivity. And we think that the demand signal for this is going to only get greater over time.
So can investors just thematically invest in strictly artificial intelligence? Because if there are ETFs for that. They just buy a basket of stocks. Or do you have to be more discerning and make a fundamental case as to why certain AI-oriented companies are better values or better risk-reward candidates than, say, others?
We look for the choke points, the companies that are absolutely dominant at a particular place in the supply chain, where they're the ones that have pricing power, they're the ones that are able to get excess earnings out of that. So they're out of this whole big theme. NVIDIA as a company occupies the choke point in this. They get pricing power. They get excess earnings. That's going to deliver better stock price in most cases. So I think that this is where you do want to be a little more discerning. You want to pick the guys that are absolutely essential and occupy choke points.
It's funny because we were just last hour talking about how the retail investors have been selling NVIDIA. We were talking about that with Robinhood. And
At Robinhood, yes.
I said, so if they're selling, who's buying? And now we know who's buying.
Absolutely.
Yeah. So, but your case for the long run is that this company will continue, I guess, to outperform the S&P, even though the past year it's been not so much.
You know, the issue is this theme is not going away. We're in the early stages of this. We're just building out the infrastructure. We haven't even gotten to where we're implementing it across the board. And so when you move to that, this is going to be something that's going to help our economy overall. Every company needs it. You take a look at CapEx spend of Microsoft. You take a look at CapEx spend of Meta. They're continuing to buy what NVIDIA is selling. And NVIDIA is not having to discount anything. And they've got long backlogs.
All right, let's talk.
We only have one ace in our hand. And apparently we don't want to play it. The chips from NVIDIA. Under the previous administration, NVIDIA was allowed to sell China high-quality chips, but not their best stuff, which was reserved for America and a bizarre list of 18 friendly countries. Now the Trump administration won't even let NVIDIA sell their second or third best stuff. As CEO Jensen Huang said on our show, it's logical to presume that China won't use these chips for the military precisely because they're American chips. It's the same way the Pentagon would never use chips from Huawei. So what is the military risk here? Jensen says that there's $50 billion in AI semiconductor business up for grabs in China. And NVIDIA used to have 95% of that market, but today it's down to 50%. Sounds like the Trump administration would like it to go to zero. The Chinese are desperate for these chips. They could buy them from NVIDIA, which has the capacity to build them now. And NVIDIA could repatriate the money to build more plants right here. It's an elegant solution that I'm providing, but I fear the White House just doesn't care about my solution. Still, if Trump wants to win this game, he may have to show his trump card, NVIDIA. As I see it, the others just don't make for a good hand. You have to play with the cards you've been dealt. And for decades, our government did everything it could to encourage outsourcing to China. They left us with a pretty lousy darn hand, both Republicans and Democrats. Between NVIDIA and Apple, Trump has a lot of leverage, but he doesn't want to use it. Those two companies seem hostage to totally different agendas inside the White House. Bottom line, I just hope that Trump's friendship is requited by Xi. We may need to change the rules or start playing a whole new game. Of course, the president could always fold, and Wall Street would love it. But I don't see that happening anytime soon, nor should it.
Today, we got news of Amazon investing an additional $10 billion in AI data centers in North Carolina. And this past Monday, we learned that Microsoft will be investing an additional $400 million in data centers in Switzerland that will include NVIDIA's newest GPUs. Speaking of Europe, Jensen Huang told us last week that he would be in Europe this week and that there are many large-scale data center projects that have yet to be announced. He also told us that many countries, including many in Europe, are working on their own national AI data center projects right now. So be on the lookout for any positive announcements out of Europe this week and next. Next week, we have NVIDIA GTC Paris with a keynote from Jensen Huang on June 11th at 11 a.m. Central European Summer Time. That's 5 a.m. Eastern, 2 a.m. Pacific. Jensen told us on NVIDIA's earnings call that he would speak about quantum GPU computing during that keynote. NVIDIA will play a pivotal role in the future of quantum computing, and I'm excited to hear what Jensen has to say on June 11th. Now I want to briefly talk about NVIDIA's next chip for China. The information reported this week that NVIDIA's next chip for China will be called the B30 with production of more than 1 million units expected by the end of this year. Now I have no idea if this story is correct or not. There have been times in the past when the information accurately reported on NVIDIA rumors, and then there have been other times when they reported on NVIDIA rumors that turn out to be incorrect. That being said, Jensen did recently say that the next chip for China cannot be on the Hopper architecture because they cannot modify it anymore to be compliant with export controls. I'll be completely honest, NVIDIA developing a new China chip does concern me slightly because I think that the current administration will be much more proactive in implementing export controls than previous administrations were, given this administration's focus on tariffs and international trade. I would hate to see NVIDIA develop a new chip for China only for that chip to be restricted soon after its launch. Hopefully that will not happen, but it is a genuine concern that I have. With this in mind, it is very important to pay attention to what happens with US-China trade negotiations, as they will have important implications for NVIDIA. Hopefully we will get news of positive progress in the future. If there were no restriction on H20 sales to China, then NVIDIA would have guided for an extra $8 billion in Q2 revenue. And so if we get a reversal of the H20 restriction in the coming months, I would expect NVIDIA stock to trade substantially higher very quickly. Keep in mind that we're talking about the H20, which is substantially lower spec than NVIDIA's Blackwell. And so a reversal of the H20 export control is possible, especially considering Jensen Huang's recent comments about China and his now close proximity to the president. We'll have to see what happens with US-China negotiations, but just know that if the H20 restriction is reversed, then NVIDIA will be looking at many billions of dollars in additional revenue that analysts are currently not factoring into their estimates. If that happens, I would expect the stock to trade meaningfully higher on such an announcement. Regardless of what happens with the China situation or semiconductor tariffs, I'm bullish on the long-term future of NVIDIA. Speaking of semiconductor tariffs, we're still waiting for those to be revealed by the Commerce Department. Please hear me well. Do not freak out if you see NVIDIA stock trade lower when the semiconductor tariffs are revealed. If NVIDIA trades lower on news of the semiconductor tariffs, then I expect it to just be a short-term reaction that has no impact on NVIDIA over the long term. Remember to keep a long-term perspective. NVIDIA and TSMC have been working to aggressively onshore manufacturing to the US, and Blackwell is already being produced at TSMC's Arizona facility. Production of NVIDIA's products is also expected to ramp at other US facilities from companies like Foxconn and Wistron in the near future. And so I think semiconductor tariffs will just be short-term noise that doesn't impact NVIDIA's long-term future. Right now, AI demand is reaching record levels based on what we've heard from each of the hyperscalers, as well as other companies like OpenAI, xAI Perplexity, and many others. NVIDIA maintains its competitive moat across both hardware and software. And now, with NVLink Fusion, NVIDIA's customers are even more likely to remain in NVIDIA's ecosystem. And NVIDIA continues delivering performance increases that are so significant that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. All things considered, I seriously think that NVIDIA have a lot of runway ahead of it, and I am bullish on the long-term future of NVIDIA. I also really like the setup for NVIDIA in the second half of this year. Blackwell Ultra should launch around the end of this quarter and should ramp very quickly. Margin should rise back to the mid 70% range later this year, and I expect many more sovereign AI deals to be announced as the year goes on. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.